Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Zamban bin Muhammad Nazir Ali. Today I'm going to present about the growth of the Islamic finance in different countries. Islamic bank play an important role in different global system because it operates based on Sharia principle, mainly prohibited in interest or riba, and promotion of profit sharing. Over time, Islamic banking have expanded across both Muslim and non-Muslim countries, proving that this system successfully adapt to different financial environment. In this assignment, we focus on two countries, Egypt and South Africa. In Egypt, we look at the Faisal Islamic Banking of Egypt, established in 1979, which is the country's first Islamic bank. It created to meet the demand of financial service that flow Islamic value, and it played a key role in developing Islamic finance in the region. For the South Africa, we study Al Barak Bank. It founded 1989. It was the first Islamic bank in South Africa, formed to serve the Muslim community while proving that Islamic finance also can operate effectively in diverse and non-Muslim financial systems. Through these two examples, we study or explore the evolution of Islamic banking, the reason of their establishment, and the challenge faced and their future role in global finance, as well the solution used to overcome obstacles in both sectors.
Assalamualaikum, my name is Wan Syahida Zulaika binti Wan Muhafizi. Firstly, I will talk about the evolution in Islamic country, Egypt. Islamic banking in Egypt began in 1963 with the MIT Gamma Saving Project, the country's first interest-free saving system. As demand for the Sharia compliance service grew, the government passed Law Number 48 in 1977, officially allowing Islamic bank to operate. 2 years later, in 1979, the Faisal Islamic Bank of Egypt was established, introducing products like profit sharing and trade financing. This marked the start of Egypt's strong Islamic banking sector and inspired other countries to follow. Next, in South Africa, before the 1980s, South African Muslims avoid conventional bank because they charge interest, which is prohibited in Islam. Inspired by development in the Middle East, community leaders partnered with the Al Barakah Group from Bahrain to launch Al Barakah Bank in 1989. It was South Africa's first Islamic bank and began by offering small businesses financing and saving accounts. Over time, it expanded to home and digital banking, promoting ethical and interest-free finance for everyone. The establishment for the Faisal Islamic Bank of Egypt was formally established in 1977 under Special Law Number 48. It was founded by Prince Mohammed Al Faisal Al Saud, combining Egyptian and Gulf investors to build a modern Sharia compliance bank. The bank set up a Sharia supervisory board to ensure all products meet Islamic principles. Its success made it a leading example for Islamic banking in the Middle East. Lastly, Al Barakah Bank was established in 1989 through collaboration between South Africa Muslim leader and Al Barakah Group from Bahrain. It aimed to offer fair, transparent and interest-free banking to both Muslim and non-Muslim. The bank created a Sharia advisory board to guarantee compliance with Islamic law and work closely with the regulator. Today, Al Barakah remains the pioneer of Islamic banking in South Africa, promoting ethical finance and community trust. That's all from me. Next, I will pass to Zam for the next topic. Thank you.
The establishment of Islamic Bank in both Muslim and non-Muslim countries are driven by similar goals to improve ethical and Sharia-compliant financial service, but the reason slightly different depending on the country and context. Let's begin with the Muslim country, Egypt. Focusing on Faisal Islamic Bank of Egypt. The bank was created mainly to provide financial service in line with Sharia, avoiding interest of riba, and applying Islamic concepts like muharabah or mudarabah. There was also a strong demand from the Muslim population for the interest-free and ethical banking alternative that matches their religion belief. The Egypt government supported the initiative by introducing special law, the Law Number 48 of 1977, which gave Islamic banking a proper legal foundation. Besides that, we are social economic motivation, such as promoting social justice, wealth distribution, and financial inclusion for the Muslim who avoiding conventional bank due to religious reasons. Historically, the bank influenced by the Prince Mohammed bin Faisal Al Saud, reflecting international cooperation in separating Islamic finance. It built upon Egypt's early Islamic bank experience, like Mid-Gamar project. Now moving to the non-Muslim country in South Africa with Al Barak Bank South Africa. This bank established to offer an alternative conventional banking for Muslim and other value ethical and fair finance. It responds to growing demand for Sharia compliant products that emphasize fairness and transparency and risk sharing. By entering the market, Al Barak helped introduce Islamic finance into the South African banking sector, diversifying and broadening the country's financial system. The bank also operates with a strong ethical and faith-based motivation, promoting justice, social responsibility, and mutual benefit, values that attract both Muslim and non-Muslim. Finally, regulatory environment in South Africa. Supported by this establishment, following Al Barak to operate under national banking law. Being part of the Al Barak Group from Bahrain also provided international experience, funding, and credibility. In summary, both banks were founded to provide ethical Sharia compliance in financial options, shaped by local needed religion value and regulatory opportunities in their respective countries.
Assalamualaikum and hello to everyone. My name is Nabia bin Jalaluddin. So today I would like to talk about the obstacle faced by both countries. So let's start with Egypt, which represents the Muslim country with Faisal Islamic Bank. One major challenge is the lack of a unified legal framework, as Egypt doesn't have a single system for Islamic banking. This made product approval complicated and costly. Another issue is the risk in murabaha and asset-based contracts, where banks must own assets before selling them, which requires strong risk management. Besides that, the bank still use outdated system that showing a need for more technology and innovation. They also face tough competition and must maintain their position by improving customer satisfaction. Meanwhile, in the non-Muslim country, South Africa shows Al-Barakah Bank face misconceptions and limited awareness about Islamic banking, causing low customer interest. There are also conflicts with conventional regulations that make fund management difficult. The bank operates on a smaller scale with fewer branches, limiting its growth. Lastly, shows economic pressures such as high unemployment and inflation affect spending and investment, while the bank cannot use interest-based tools for protection. So next is about how they overcome those obstacles. So to overcome operational and regulatory challenge shows in Egypt, Faisal Islamic Bank has tackled operational inertia by upgrading its digital platform, which reduces manual work and improves efficiency. They also enhance risk management around murabaha and asset-backed contracts to ensure all transactions comply with Sharia law, maintaining security and regulatory alignment. By addressing capital awareness and compliance issues, the bank reinforces financial stability and builds trust. Additionally, they sustain market leadership by focusing on innovation and customer engagement. On the other hand, in South Africa, shows Al Baraka Bank has focused on raising public awareness and understanding of Islamic bank through CSR initiative about community investment. They develop Sharia-compliant products aligned with local tax regulations, such as a tax-free investment model. This not only boosts inclusion but also improves efficiency by expanding their physical branch. To combat economic pressures, they strengthened financial performance strategies, which help the bank withstand issues like inflation and unemployment. So, I will pass to Nur Atia for the next presenting. Thank you.
Assalamualaikum and good day everyone. My name is Nuatia. Today we will look to the present situation that happened at Faisal Islamic Bank. Firstly is the Islamic banking sector in Egypt is growing rapidly, which is reaching over 1 trillion Egyptian pounds in 2025, a 54% increase from last year. Faisal Islamic Bank is one of the top 4 fully Islamic banks, serving millions of customers across the country. The bank has also advanced in technology using modern systems like Cisco SCI and offering digital banking, mobile apps and e-wallets such as Faisal Cash. Supported by the Central Bank of Egypt, Faisal Islamic Bank continues to expand its investment, retail and corporate banking service, showing strong progress and innovation in the Islamic financial market. In short, Faisal Islamic Bank remains a key leader in Egypt's fast-growing Islamic banking industry. Now we look at present situation of Al Baraka Bank in South Africa, which is a non-Muslim country. Firstly, the bank focused on raising awareness through community investment and CSR initiative, helping more people understand the concept and benefit of Islamic banking. Secondly, it's developing products that align with both Sharia and local tax law, such as the tax-free investment product that attract a wider customer base. Thirdly is Al Baraka has been improving branch efficiency by reviewing and optimizing its network to ensure better customer service and operational performance. Lastly, the bank is strengthening its financial position to withstand challenges like economic shocks, inflation and unemployment, showing strong stability in a tough economic environment in their country. Next, we move to the future movement for Egypt's Islamic banking, especially Faisal Islamic Bank of Egypt. Firstly, the market is expected to grow rapidly with annual growth rates between 50 to 70% as more people turn to Islamic banking. Secondly, we see an expansion of branches and access with more Islamic bank branches and Islamic windows opening, especially in smaller cities and rural areas. Third, regulatory innovation will continue. Egypt plans to issue around $2 billion worth of sukuk in 2025, showing that strong government support for Islamic finance. Lastly is product innovation and digitalization will make Islamic banking more accessible, convenient and adaptable for all customers. Lastly is future movement for Al Baraka Bank in South Africa. Firstly, Islamic banking assets across Africa are expected to grow strongly over the next decade, showing increasing confidence in Sharia compliance finance. Secondly, the industry is diversifying its product, moving beyond traditional banking to include sukuk, ESG, and sustainable investment, aligning with global financial trends. Third, regulatory and legal frameworks are becoming more supportive as more African countries introduce clear and inclusive Islamic banking laws to encourage growth. Lastly is Islamic finance is expanding into corporate and institutional markets, not just serving individuals but also supporting business and organization.
In conclusion, the growth of Islamic finance in Egypt and South Africa show that it can succeed anywhere in the world. The Faisal Islamic Bank of Egypt has proven how Islamic banking in a Muslim majority country can grow from small beginning into the major part of the national financial system, supported by good laws, new technology, and the demand for ethical, interest-free service. In South Africa, Al Baroka Bank has shown that Islamic finance can also thrive in non-Muslim countries by building awareness, offering a variety of products, and engaging with the community. Despite facing challenges such as strict regulation and competition, this example show that Islamic finance is not limited by religion or location but is built on fairness, honesty, and shared responsibility. With digital innovation and the rise of sustainable products like Sukuk and Takaful, the future of Islamic finance look promising as it continues to support economic growth and financial inclusion around